All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic Thanksgiving weekend, and everybody is safe and full, and just probably struggling to get back to it a little bit in a few cases, but great to have you aboard. This morning, market opened to a very red start here after S&P futures were very green overnight, and that is affecting a lot of stocks, and we'll go take a look at it. We do have to make one challenge change, and that's with Netflix. And Netflix is down $9 here. Pretty bad day for Netflix, about as bad as Netflix bad days come. And so, with us being beyond our time stop and the trade going red, I do need to pull it off of the board here. So going to do that. Let's see here. Create closing order, and our bid ask is 810 to 830. I'm just gonna mark it out of this thing. So 810 was my fill price there. 810 here on Netflix, and I'll show you what that does for the entirety of the trade here. But 810. Okay. Make sure that alert is out. There it goes. Okay. All right. So this pulls it at 810. The exit here is 12:02 a.m., which puts it at a $580 loss on that leg, which basically means what? Which basically means we made a $520 gain on the entirety of Netflix, the entire position here, which, isn't going to get us too far, in the challenge, puts us right back into this, 2,800 level, just kind of, we haven't been able to break away from this level here, the entirety of the challenge. We've had the worst numbers, this challenge that we have seen over a given period of time since last October, November. Challenge is, yes, surviving, but we could go and talk about all the sugar coating and all of that, and the sustainability and all that kind of stuff. But if you're like me, you don't really care. You want to move on. Let's get to the next trade. Let's get this show on the road, which is where my mindset is. But at the same time, there's the sustainability continues, but we're just not finding that traction here just yet. And we've had two trades that have hit their price targets this challenge, which is way under the norm of what I expect, per challenge. We expect more than 55% of the trades to go and hit at least their first price target. Here we've had 2 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we're really low on that side there, below 20%. And the two that did, really didn't pay off in terms of holding the additional position. With holding those additional positions, it's taken off over almost $1,400 here from that. Now, this isn't what we're going to see, or what we see in the entirety of the data. We didn't see this last challenge, but we are seeing it with the two here so far. This challenge, with the way that it has, with the way that it is played out there. So, in all cash and ready to strike, and get on to the next signal. Now, I mentioned this morning some ugly price action in the market. S&P futures down 27. You can kind of see last night S&P futures were up about 14 points, and then here we go. Chunk. And we've had a number of things go on, from commentary out of China to U.S. President Trump basically, calling for tariffs on Brazil and on Argentina. And then we've had some economic data here come into play. And let me show you we're not going to go through the data in detail here. I'll do that this afternoon. But just the initial numbers and how they compare. Let me show that to you here. But the ISM, the most important one, at least, in my opinion here, was expected to come in at 49.4. and came in at 48.1. It missed and continued contraction there. So not a pretty number there. If we look at the PMI number, PMI manufacturing number, it came in better than expected, right? So we have a very kind of mixed outlook there with it. And we have a pretty sizable move in bonds that is going on here with the TLT down over $2. So, we have yields on the rise, the ISM number not so pretty, some additional tariffs, some reports that we may not see anything out of the U.S. and China in terms of a trade deal until year end, and all putting a headwind here into stocks. Not to mention the kind of seasonality element that, when we mentioned before. So naturally, we'd expect there to be a few downside crossovers here for the challenge. None of them are triggering bearish here just yet, but here's the list. Microsoft, Twilio, JD, Intel, Honeywell, Cat. These are the stocks that have the downside 3-7 crossovers on them. Again, none triggering bearish here just yet. But by the end of the day, we could see, one or two emerge here. Something like a Microsoft isn't going to emerge, coming off of a new high. Honeywell's had a few lower highs here, but the consolidation risk on that is tremendously high. Caterpillar and Intel, both kind of similar charts, similar positions, just very high consolidation risk. And then Twilio, which has had a very nice bounce, falling off here sharply today. Like a lot of the other kind of small tech, small tech consumer tech type companies here today. We see it with Netflix. We're seeing it with Twilio. We're seeing it with several other stocks out there. Snapchat not as much, but some pretty sharp sell-offs in a few of those areas. And then JD, which is a Chinese internet company here. Very similar, chart action to what we see out of, Honeywell, which is a, big multinational industrial. So those are the downside crossovers we see. Again, none of those very close to signaling. I do expect a few more to come on the list by the end of the day. On the upside, we have Alcoa, which is, has an upside crossover. And you think today, why would stocks have upside crossovers? Well, we're still seeing a lot of differentiation in stocks here today. And, while, yes, we have the majority of stocks down, right, the NYAD down here at minus 1,200, more stocks are red than green. We're not talking about, even with the market down 27 points, we're not talking about even levels we saw in August, September, October, where, just the majority of the market was red. There's still a high level of differentiation out there. Banks with the big pullback in bonds were green earlier, starting to dip into the red. Bank of America, JP Morgan, still trying to hold on to gains here this morning with the market, down like it is. With the big move up in bonds, I'm very interested to see how some of these high dividend names, play out. An AT&T, Verizon, would not be surprised to see some sharper pullbacks in those names, or any name that has that bigger premium associated here with it. All right, so that's the challenge. That's the scans. And kind of how they sit. So holding all cash right now for the challenge, and we'll be looking for the next signal and looking to go. All right. Now, one thing I did want to show was the seasonality, and we talked about this in November. And this whole concept of a Santa Claus rally. And when does Santa Claus come? He comes in November when nobody's talking about him. And when does Santa Claus not come? Well, here over the last 5 years, and this takes into account the last 6 years for every other month on the calendar, and the last 5 years for December, just the way this seasonality chart's set up. So you can see November, it's 100%, average gain 2.6%. November has been by far the best month for the markets, and not only in terms of how often it goes up, but the magnitude in which it goes up. It has been the most bullish here over the years, over the last 6 years now, here for November. We talked about, a month ago how November was Santa Claus rally time, and we have seen that. We have seen the Santa Claus rally, this just slow grind, not everybody participating, but no real sell traction coming in, to the markets. But you take a look at what December has been. It has been the worst month over the last 5 years. In fact, it is the only month where the gains are negative, and it's minus 1.5%. It has gone up 2 of the 5 years. The other 3 out of 5 have been down. What's that tell you? It tells you that when it's fallen, the fall has been pretty decent. We even saw it last year. But going into the end of this year with the market sitting, where it is, with the S&P having, made some very nice gains on the year. You just think about the yearly gains, to see some, sharper selling come in over the course of this month. We've talked about that risk and that possibility. Is today a sign that it's getting ready to start? I think it's definitely starting, right? I think there's, I don't think anything about today says we can't go and hit a new high briefly, but I do think today's action so far is saying, look, the tops are likely in. If we do get something, it'll be a little bit more like July here, where we get an initial sell, a little rally, and then kind of a sharper drop. But are we in this more of an April type situation? Are we in more of a July type situation? Either way, I think we're in one of those situations where, ultimately we're going to see the markets, have to retest at least some retracement levels here on the October-November rally that we have seen. As far as, how the market metrics are moving and everything, it's, early Monday morning, so I don't read too much into the metrics yet. But the metrics aren't turning in a big way. They are turning a little bit, but we have small caps down 0.86% with the S&P down 0.7%. So there's not a big differential between them. If we look at things like the IYT, transports, we're not talking about anything too massive there. Semiconductors, nothing too massive there. We go to, China, the FXI, it had its big drop here on Friday, that big gap down that it had. And, nothing too much in it. So, just in terms of most of the metrics, not a lot in it here this morning to suggest, hey, the bears are ready to run. But it is a bigger magnitude move than what we have seen, and a sharper, more precipitous drop than what we have seen here in some time. I would not be surprised to see that, the market does not close lower than this 31.15 level here today. In fact, I would be very surprised if it does close lower than 31.15 on S&P futures, just given what this volume marker is. It doesn't mean we can't make another dip lower. In fact, I would kind of suspect we will see another dip lower, and then a rally back to this level. But chances are very slim that the market will close below this level, this kind of 31.15 level where we just saw the monster volume come into play. If the market does close below that level, look out below. It's going down, quite quickly, quite precipitously, if that level does not hold. Okay. All right, so challenge back to all cash here. We'll be looking to react to the next signal and go from there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.